Good morning, traders. Had a wonderful discussion in a small group this week about grading the quality of hold levels and how I do it. So I do grade the quality of the hold levels. To be honest, I've never heard Cotton really talk about this very much from my memory, but I do grade the quality of the hold levels. And here's how I do it. And here's why I do it. Because if I have the highest quality level, I'm going to go with higher leverage. And as the quality of the level drops, so does my risk. Not as many contracts, not as much size, not as much leverage, all of those things. So to me, the number one high quality hold level is inside of a fair value gap. Price just displaces down quickly, leaving a vacuum, and you mark your levels inside of those fair value gaps. To me, that's number one, and that's worthy of the best leverage under the right conditions. So we started laddering down here, and if price would have come back up somewhere in here, I would have been a larger leverage trade. But price never came back, never gave you the opportunity. It had several ladders down. So most likely by the time price gets back up here, price action might tell me, no, we're laddering up now. So I'm not looking for a short, but I'm looking for a short somewhere in this space for sure. And I would put on some leverage. Just didn't happen in this case. Number two quality I would consider, because there's two candles going through the level, which I promised to show you, and I'm going to trade it smaller. So, draw any of these levels here, right here. You got two candles going through it. If you look at my mouse, I got a horizontal line and a vertical line coming all out of it. And so what we're going to do is we're going to count the number of candles that touch this level. With this blue candle right here is touching this level, and the next blue candle. So that's two candles touching that level. So it gets a grade of 2 because two candles. I consider that muddy. I consider 3 candles muddy. And here's an example of 3 candles. The very next hold. It's kind of great. This blue candle, this blue candle, this blue candle. 3 candles right there are touching the level. To me, that's even muddier. Okay, I would mark it, but I know it's riskier. And I would trade at smaller leverage. So in this case, we got a couple waves down, and when this price came back up, to me that had been the optimal entry in a laddering down situation, and that would have been beautiful entry. When it came back, it still did a little bounce because it didn't actually touch it, but it still did a little bounce, which is nice, and I would have wanted to know where my backup levels were. So when 3 candles touch it, mark it, but no, it's riskier. It needs a good backup level to enter. And of course, when you're trading with the current, you can be even a little more aggressive because you're trading with the trend. And if there's 4 candles touching it, I don't even mark it. So here's an example of 4 candles. So I got this level here. How many candles are touching it? 1, 2, 3, 4. I may not even mark that. If I do mark it, I know I'm not going to trade it. I just am marking it to have marked. I'd have been much more interested in the break level personally. So I would have missed this trade because I wouldn't have even wanted to mark it. It appears to have done just perfectly. Right here would have been the best entry, in my opinion. Of course, it touched it several times. I would have been much more interested in the break level trade. And in this instance, I wouldn't have been in the trade. Oh, well, don't care. So what? I've seen it just too many times that when I see 4 candles, it's a lower grade level. Because look how many times it's, because I can look at each level as having a certain amount of bounce power. And I look at each, so price went under it. It came back, it came back, it came back, it came back. I mean, geez, how much bounce power still exists in this? In my opinion, not very much, and from my observation, not worthy of trading. There are easier trades. So let's look at what happened to these levels that we drew. This level, that would have been a great entry. Touching it here because you're mainly with the trend. mainly with the trend. If we were chopping, we might see something a little different here with this 3-candle muddy level. This one is a 2-candle level. And to be honest, you would have known from boot camp, if you attended my boot camp, right there is where I would have entered. Absolutely fantastic. Let's look at these two levels. So prices went down, it consolidated forever, and then it starts skyrocketing. At this point, when it starts skyrocketing, are we looking for shorts, or we've recognized that the trend has changed? In our room, we would have recognized the trend has changed because we've taken out a number of break levels to the north, and I respect that. However, I do want you to notice, for the sake of this video, so I just want to show those are those two levels. Price still touched and bounced. I just find there's easier trades than going against the current. The current is now up. We want to be looking for longs. Could you take these shorts? Yes, you can. Just be quick on the DHM. Protect your entry. Get as much of profit as you can. I would be trailing at a 50% profit as this thing has bounced. And you could have shorted both of those, no problem. It's just a little bit harder of a trade. It takes some emotional and mental equity away from you, knowing you're going against the trade. So I tend to not do these trades anymore. I tend to want to only be with the current because I find that those trades are easier. And you'll hear me say in our Zoom room pretty regularly, there are easier trades. All right, so that's how I judge the quality of levels. And the reason why I judge them is because it will affect my leverage. But the most important thing that affects my leverage is trend, trading with the current. And then I want to judge the quality of the level to even further refine the risk profile of this particular trade. Okay, thank you for listening. See you in the Zoom room.